Hello, friends. It's a pleasure to connect with you all again. Today, I'm going to speak to you about an important shift that's happening in our stock markets. Not many people seem to be recognizing this particular shift. I'm going to speak to you about the Indian conglomerates. When I'm talking about conglomerates, I'm talking about groups like Adani, Reliance, Tata, Birla, Honda, Bajaj, TVS, etc. And what I personally feel as the Berkshire movement as far as India is concerned. I'll tell you why. Because these conglomerates are turning out to be amazing capital allocators, and this is going to transform the Indian economy over the next couple of decades. So let me set the context. So if you look at the history of any economy, especially developed market economy, conglomerates in those countries have played a great role. So if you take America, for example, it's the Vanderbilts who built the railroads, it's the Rockefellers who built the oil lines, etc. Similarly, if you go to something like, say, Japan, we are looking at business houses like Mitsubishi, Mitsui. These kind of houses invested in some of the key aspects that the economy required at that point in time, including railroads, infrastructure, logistics. Similarly, if you go to Korea, it's the chaebols, basically the Samsungs, LGs, and Hyundai of the world, who invested big time into roads, rails, and some of the other important aspects which made their economy move from a developing economy into a developed economy. The question that we need to ask ourselves is a similar shift happening in the Indian context? Friends, let us look at some numbers. These are staggering numbers, but we at NAFA track almost 20 business houses encompassing almost 162 conglomerates. These 20 business houses, hold your breath, have a combined market capitalization of 126 lakh crores. So what is 126 lakh crores? So if you look at the entire PSU universe, the entire PSU universe is barely 70 lakh crores. So today the conglomerate universe is 1.75 times the PSU universe. So this was something that was unimaginable, say maybe 2 decades back or even 1.5 decades back. So it's a private capital which is driving the show. Which is driving the show as far as the Indian economy is concerned. These companies also generate a top line of almost 45 lakh crores, EBITDA of 9 lakh crores, and a PAT number of 4 lakh crores. So what is 4 lakh crores? 4 lakh crores is essentially 45% of Nifty 50's entire profitability. This 4 lakh crores comes from these top 20 business houses. Now let us very quickly look at valuations. So there is generally a perception that it's the Adani Group companies which are commanding sky high valuation multiples in the markets, but the data shows us that it is not the Adani Group, but groups like Wadias, the Tata groups. These companies, these groups actually command much higher P multiple than the Adani Group, because market is valuing not only their earnings but their ability to allocate capital quite efficiently. So if you look at why this is a Berkshire movement as far as India is concerned, why did Berkshire Hathaway become a legendary company? Berkshire Hathaway became a legendary company not because it went and it built factories all over the world. Berkshire Hathaway invested across the spectrum, whether it is consumer, tech, finance, whether it is utilities, insurance. They invested across the spectrum, and it became such a giant. We are seeing a very, very similar kind of a behavior from the Indian conglomerates. Let's take Reliance, for example. From oil, they moved to telecom, from telecom to retail. Now they are getting into renewables in a huge way. If you look at the Tata Group, they moved from trucks to information technology to now electric vehicles to semiconductors and even airlines at this point in time. If you look at something like the Adani Group, from ports to energy, to airports, to data centers, to green hydrogen, they are straddling across the spectrum. Similar case with Mahindra. Mahindra is moving from farm equipments, finance, IT, defense, and so on and so forth. So what has happened over the last 1.5 decades or so is that these conglomerates have actually cleaned up their balance sheet, brought down their debt to equity ratio, and all the subsidiaries that were kind of struggling, they have brought them back into shape, and they have enhanced the corporate governance, and they have won the trust of both FIIs and DIIs, which is now reflected in a significant amount of FII and DII holding in these sort of companies. And now they are straddling across various sectors. This is very important from an Indian context simply because of the fact that over the next 20 years, India needs more and more railway lines, airports, port infrastructure, roads, connectivity, logistics, and these conglomerates have the balance sheet strength to invest and in this journey from taking India from a developing economy into a developed economy. So by virtue of the fact that these conglomerates have multiple businesses, if there is a downfall in one particular business, there is another business which sees momentum, and therefore they are able to manage the risk. And at the same time, if they are able to sniff some sunrise sector, they have the balance sheet strength to invest in those sectors and profit for themselves and for the economy as a whole. So I feel that it is very important to keep tracking the conglomerates and the journey from the Indian economy point of view. Thank you for your time.